morning. It's another 55 minutes ahead of us. Let's make the most of it, as is our custom here on Business Morning. I'm Ini John Mekwa. We'll start off with oil prices. Prices rose in early Asian trade on Thursday after strong demand for fuels in the United States outweighed concerns about the possibility of the world's biggest oil producer and consumer defaulting on its debts. Brent's crude futures rose 26 cents to 0.34% to $76.67 a barrel. U.S. crude futures rose also 28 cents to $72.84. Latest U.S. data showed consumer prices rose in April, increasing the likelihood that the Federal Reserve will maintain higher interest rates, which can have a knock-on effect on reducing oil demand. Rising global interest rates have weighed on oil prices in recent months, with traders concerned about recession. However, fuel demand in the United States is showing signs of strength. U.S. gasoline inventories fell 3.2 million barrels last week, much more than the 1.2 million barrels that forecast by analysts. Distillate stocks also declined. Data from the United States Energy Information Administration shows this, and U.S. jet fuel demand rose to its highest level since December 2019. Meanwhile, detailed talks on raising the U.S. government's $31.4 trillion debt ceiling kicked off on Wednesday, with Republicans continuing to insist on spending cuts. The standoff has rattled investors, sending the cost of insuring exposure to United States government debt to record highs as Wall Street grows more concerned about the risk of an unprecedented default. In the grains market, Chicago soybean futures lost more ground on Thursday, with prices hitting a one-week low as rapidly progressing U.S. planting pressured prices, which slid for a fourth season in a row on good weather for crop development in parts of the United States Midwest. The most active soybean contracts on the Chicago Board of Trade fell 0.4% to $13.98 for 3/4 of a bushel after hitting its lowest since May the 3rd. That's at $13.97 a bushel. Wheat also dropped 0.4% to $6.39 a bushel, and corn lost 0.5% to $5.91 for 1/4 of a bushel. Fast pace of United States planting and forecasts of favorable growing weather are weighing on soybean prices. However, Argentina's Rosario Grains Exchange cuts its forecast for the 2022-2023 soybean harvest by 6.5% to 21.5 million tons as the effects of adverse weather hit the country's top crop. We come back here in Nigeria. Remember that $800 million to be or not to be? Well, President Muhammadu Buhari has written to the Senate to request approval to borrow that sum, that's $800 million, from the World Bank. The president says that this is to enable the federal government make available palliatives like the conditional cash transfer of money to over 10 million poor Nigerians to cushion the effects of the proposed removal of petroleum subsidy. And putting a certain matter to rest, the Central Bank of Nigeria has clarified some media reports that we had yesterday suggesting that the bank verification number, that's the BVN, issued by the CBN in collaboration with the Nigeria Interbank Settlement System, NIBS, expires after a 10-year period. In a statement released, the financial market regulator says that contrary to these claims, the BVN issued in the country has no expiry date. The CBN explains that once a customer's biometrics have been captured and enrolled in the database of NIBS, then the BVN remains for life. However, the CBN says that the regulatory framework for BVN, it's issued in 2021, stipulates that customers can only change their records due to certain conditions spelled out in the document and after being cleared by relevant authorities. Let's take a short break now. When we come back, it's commodities time. And U.S. inflation eases. We'll talk about that and a whole lot more. You're welcome back. Well, let's get right into our conversations of today. We saw those numbers coming from the United States, and we've seen how markets are reacting, global oil, and especially reacting to that inflation and the thoughts that the Fed will continue hiking rates. But anyway, let's get more on this from Dumebi. She's here now, Dumebi Oluwole. Good morning. Thank you for your time, Dumebi.
Thank you.
So we know that the target for the United States inflation is 2%, but they're still at 4.9%, a long way from the target, and the world is having to suffer from it.
Well, essentially what this points to is that the U.S. Fed might, want to continue its rate hikes, even though it will be less aggressive, because inflation did fall, right? Even though it was very marginal.
Yeah, from 4.95,
just 4.9%, but still, it points to the fact that, the rate hikes are beginning to, or at least making some progress to cool inflationary pressures. However, the main focus for the U.S. Fed is usually the core inflation numbers, and that's because it's inflation less, volatile commodities like food and energy. So that tells you, it just shows the underlying inflationary pressures that are still potent in the economy. And because that hasn't, really declined, it just eased by, I think, 5.5 to 5.3%. So it's still pretty much, above where the U.S. Fed would like it to get to, and it didn't decline by so much. So at 5.5% or 5.3%, core inflation is still very important, indicating that inflationary pressures in the U.S. are still high. But there are other things that point to the fact that inflationary pressures could begin to decline, and that's because, especially core inflation, that's because things like shelter costs actually fell. We're already getting to spring, so some level of, so we could begin to see a decline in energy demand, and that's just because, typically energy demand, when it's the winter season, we see a high increase in demand for energy products. But because we're getting to spring, getting to summer period, we could see that decline. So these are some of the things that the U.S. Fed will be, considering before either hiking rates or leaving things be for the time being. And the reason why they might even consider increasing rates is just because they're trying to the goal right now is to do whatever it takes to, simply
get to that 2%.
Yes, get to 2%.
Is that possible? It's still a long way away. 4.9 and 2%.
Well, even though it's still a long there's still some gap, in between. The truth of the matter is that the monetary policy transmission mechanism in the U.S. is really strong. And why I say that is because once there's an increase in interest rates, once there's an increase in the anchor rate or the U.S. Fed's fund rate, you see an immediate increase in other government securities, like bonds, treasury bills, and you see the markets react. Essentially, mortgage rates also increase. So it tells you how strong the monetary policy transmission mechanism is, and with time we should begin to see all of this take effect to simply cool inflationary pressures. But on the flip side of it is continuous hike rates will continue to fuel...
It's a threat of recession.
Exactly. It continues to fuel recessionary
pressure because pressures. Demand squeezes.
Exactly, and cost of borrowing also increases, right? So, and apart from that, the banking crisis that has been happening is also not making things any easier. So earlier this week, we saw almost a complete shift to safe haven assets. The price of gold increased to a record high. So clearly, we're seeing markets respond in diverse ways, right? So even when inflation data came out, to one extent, some investors, were encouraged that, okay, with this slight decline, just maybe the U.S. Fed might halt, its increase in rates for some time before now taking it back up again if inflationary pressures seem like they're not cooling. So, and we saw bond yields actually increase to that effect, but we also saw gold prices increase. So, meaning that market reactions are very, very different too.
But the U.S. also has that debt limits to also either default or increase its debt limit. Of course, the Republicans are not having that, but we know that at the end of the day, the U.S., the Republicans, the Democrats, at the end of the day, it might take a while, but they normally would just compromise for the good of the country, But how do you see this ending?
I mean, it's the U.S. we're talking about.
Not Nigeria.
It's the U.S. So definitely there will be a quick resolve. And that's because this is not the first time the debt ceiling has been increased, right? And the goal oftentimes is just to ensure that there's
What
no
are the
default.
risks, you know?
Yeah, so the two scenarios are if the debt ceiling is not increased and the U.S. defaults on it, which is highly unlikely, if that happens, you know, just the same way it would have an impact on the Nigerian economy, it's just the same way, you know, it will have an impact on the U.S. economy. So it just simply means that the U.S.
Who is going to rate them junk? Because
well, I mean, maybe not junk. Of course not junk.
Not junk, but at least, you know, the rating should reduce because if you default, that's one of the consequences.
Well, like I said, it's the U.S. So the chances of that happening are slim.
JP Morgan is the US, Fitch is in the US. These are the guys who do the rating.
But I mean, coming from when the financial crisis started, this was one of the reasons why they made credit rating agencies stand alone. They're independent of any government influence, any political influence. So essentially, they are like the backbone of the economy and the financial, you know, system of any country or the central bank itself. So essentially, what this means is that whether or not they default or it doesn't change. It wouldn't. The credit rating agencies are not moved by all of this. You understand? If it requires that the US
the rating
is downgraded, we will definitely see that. And why? Because they always have talks with governments before these ratings are done or before these ratings are announced. So if there are chances that the debt ceiling will probably be increased and the US, maybe the US actually commits to, you know, covering some of this debt in the meantime, you know, we might see that, or they would come out say, oh, we're rating it stable, and it's just because these plans have been put in place to ensure that to ensure that the US doesn't default on its debt. We could also see that they would say, oh, we're rating the US down, and this is because of this and this and this. But like we always say, it's the US. There are certain things that we expect.
When you say that, you know, it just paints another picture in my mind.
No, it's because it's the truth, right? This is the dominant economy in the world today, right? A lot of countries' external reserves are pegged to the US dollar. Things like this would affect the value of the US dollar, and it has significant implications for other countries. There are a lot of things to consider.
We're out of time maybe, but just briefly, now how does all of this tie into the commodity space? How does it affect the commodity space?
Well, let's just look at the inflation.
I know you talked about gold earlier.
Yes, exactly. So inflation generally, if the US Fed continues to hike rates, for Nigeria, what that simply means is that we would, number one, be exposed to a decline in oil prices. We've seen oil prices fall from the $80 benchmark already, and this simply means lower oil revenues for the economy. Then there's also the monetary aspect of it, that because the US Fed is going to continue, because the US Fed might increase their interest rates again, the CBN will have to continue to do that to mirror, you know, these rate hikes to continue to woo investors and keep stabilize the currency peg to the US dollar to avoid speculative dumping of the naira, right? So these are some of the things that could happen. Essentially, all commodity prices right now, we're seeing seasonality take its full effect. We're in the planting season for a lot of commodities, and we're also in the harvest season for some. So, for example, tomato prices, we've seen that tomato prices are really high, and that's just because, you know, of there's pest disease that's really ravaging tomato harvest right now. There's also the fact that supply is really low, and there's also the planting, you know, effect also happening there. So there are lots of things happening. Commodity prices are mixed generally, but essentially, compared to last year, prices are still, you know, very much higher than what they were before.
All right, thank you so much, Dumebiolu Wale, Senior Analyst with Financial Derivatives Company, for your time this morning.
Thank you.
All right, we'll take a breather. When we come back, we'll be celebrating 15 years of G-Tex Homes. Join us after then. congratulations to G-Text Homes as they celebrate 15 years as a means of growing the global real estate sector, real estate development. They are heading to Dubai now, and they're promising 180 units of two-bedroom apartments in Dubai. We're happy it's being run by a Nigerian, and we have him joining us virtually this morning from the United States, Dr. Stephen Akintayo, not a stranger to this platform. He's been here a couple of times. Dr. Akintayo, chairman and founder of G-Text Holdings. Good to have you, and congratulations. Where are we celebrating these 15 years?
Well, Nigeria actually. We'll be having a very small get-together at the hotel on Sunday, 21st.
Wow, that's an open invitation. The world will be there. So, so tell us, it's been 15 years so far. We've had you on this show. You've done, you've celebrated your books. You've celebrated businesses, empowering entrepreneurs, and all of that. Looking back when this started, did you see yourself going this far?
Well, I would say yes and no. Yes, there was that faith that, one could grow big and the business could start and we could evolve. But also when you see the challenges we faced, we didn't have a sponsor. I mean, we didn't start the normal way people have a business plan. You would get investors together. We didn't have none of that. So we were just getting better as we go. Just learning the ropes as we go. So indeed, God has been faithful. So yes, we had the vision of going big, but we also were not prepared or have all the things put together. So for me, I say yes and no. God has been good.
Yes, I know. Recently, you unveiled the plan for G-Text Dubai property development. I'm in Nigeria. I'm a Nigerian. And I would like to know, how does this relate to the real estate sector in Nigeria? Are you done with development in Nigeria before heading to Dubai?
Not at all. I mean, what we've even done in Nigeria is just like a scratch, because what we've done in the last 8 years in the real estate sector has been more of land banking. We kind of were able to sanitize the system, create trust, because one of the things we saw was that there were challenges when it comes to land acquisition. People couldn't trust, either families they were buying from the locals or even companies they were trying to buy from as well. So we're able to, kind of innovate. Documents are now being sent to all our clients anywhere in the world. We do virtual inspection, meaning you don't need to be in Nigeria to see the property and to have the property handed over to you. And so we had to put in security anywhere our estates are so that to prevent land grabbers, so that those who bought from us later, somebody else doesn't just come on the land and then take it over. So we've had to do that. And what we've done is acquire over 30 acres. And now we're beginning to get into that construction phase. And that also was something we needed to think carefully about because of the issue of building collapse. How do we put systems and policies in place to ensure that when we start building, we also don't spoil the reputation of the company that we built over the years.
So let's know more about this project in Dubai, 180 units of two-bedroom. How long is it going to last for? Why two-bedroom? Is that what is most popular or in demand there? And why Dubai?
Yes, there's a huge demand for two-bedroom in Dubai, because, years ago, Dubai used to just be that place where you go for vacation, for fun. And so a studio, one-bedroom was okay. And those who were even working there were not bringing their families to Dubai. But now Dubai has become one of the safest cities to live in. So you're seeing families move over. And so there's a huge demand for two-bedroom. And we felt, well, we're here to make that work. We spent the last 3 years doing property management. We currently control over 100 properties in Dubai as we speak. We've done property management, we've done property brokerage, helping people to secure. Again, it was need that also led us there. We've seen a lot of Nigerians who invested in Dubai not getting returns on investment because they don't live in Dubai. Now they are not getting rental income. Some of them, the people managing it were not managing for them. So we had to go in to fill that gap. And now we're ready to start development. We got this amazing property. We've decided to put it into 4 phases. And then we'll be able to do 180 units and then another 180 in the phase 4 of it. And we're excited because we're also coming up with a unique concept around it. We're looking at partnering with Afrobeats because we have to infuse Africa somewhere, right? So we're looking at partnering with Afrobeat artists, actors as well, who are credible and just brand it in their name, right? And they join our architects to do the interior design. So for example, I'm just giving an example now, a Davido residencies or a Burna Boy residency or a Tiwa Savage residency. And just, we call it the celebrity project, where we're just going to be having celebrity branded properties and housing. Because real estate is also like cars now. So there has to be some level of branding to it as well.
Yeah, branding and showbiz there. Reminds me of what Tiwa Savage did at the coronation. I mean, doing that classical and then putting our local infusion of art. Yeah, beautiful there. So please do help sell us. And I believe that will be one of your unique selling points over there in Dubai when we are talking of this initiative.
Yes, exactly. So for us, we felt that, and I've always had that strong feeling that as we expand, I mean, we're going to be doing a lot in the US as well next year, massive housing here in the US as well. But as we expand, one of the things I had always said to myself is we must reflect where we're coming from, because you don't always see businesses that start in Africa begin to dominate markets outside of Africa. And so as we begin to move to other countries and expand, we must not lose, that the people must know that this is an African-owned company, because we see that in Africa, but we don't see that outside of Africa. So if you come to Nigeria, you see Lebanese-owned businesses, Indian-owned businesses, right? But when you go to India, how many Nigerian-owned businesses do you see, or African-owned businesses? To be able to expand and reflect the fact that we're African-owned and we are proud of our heritage, and we're hoping we can partner with a lot of other Africans. I mean, our music is doing well, our movie is doing well, so we're hoping to partner. Of course, we are also conscious of trying to work with celebrities who have integrity and who have business mindset, because sometimes my challenge working with celebrities is that you can find some of them not just having that business mindset, so we hope we're able to work with some credible people.
So what's the stage of development now? Do you have those property available for sale or so?
So at the moment, it's going to take another 6 months before we can start selling, because we need to go through regulatory permits and things like that. So hopefully in the next 6 months, we might be ready for selling. But at the moment, of course, we're having a lot of private investors talk to us, and we're open to that, who are able to work with us and say, hey, we're excited to be part of this and invest in this. And so we're open as much to private investment, yes.
Any plans to replicate this in Nigeria?
Absolutely. I mean, particularly the celebrity branding concept, we're definitely trying to work that also in Nigeria, because again, what we're seeing is the fact that we don't just need to build quality housing, we also need to build houses that people move into and they are happy to go home, right? It's kind of inspirational, and I'm not sure we have enough of that. So again, like I said, my concern sometimes with doing business back at home, you have regulatory issues, you have a lot of sabotage issues, and sometimes we also don't take ourselves really serious in terms of dealing with each other, the issue of trust. But I'm sure we can overcome all of that, and I'm very excited that in the next 5-10 years, the volume of housing we will have built is going to be really huge. We have a new group CEO coming on board. He's have over 20 years in construction. So he will be the new, I'm stepping back as the chairman and just help with branding, with marketing, with try to raise investment for the company. And I didn't even study construction, right? I studied microbiology. It was later I went to start doing some courses in Harvard, but my background was even in civil engineering. So it's time to hand it over to green professionals. And
Dr. Akintaya, I wanted to say, aren't you too young to retire?
No. I'm funny enough, I'm not retiring at all, not at all. I'm
just changing focus.
Yes, I'm just stepping back to be a chairman and be able to then help a lot of startups, mentor a lot of CEOs. I started a new program for CEOs, and I didn't even charge for it. I normally charge, but I gave this about 15 CEOs just to celebrate our 15-year anniversary, who are already maybe doing a few millions in their business. I want to start doing billions. And we've started that for over 2 months now. And I'm enjoying it. And so there's a lot one can do. In the last 15 years, I'm young, but there's so much that has come with that last 15 years. So I want to start investing in small businesses, use that knowledge to help them grow and scale, particularly internationally. And then we're expanding to movies. We're going to be, doing a movie this year.
Wow.
So we're expanding to other sectors that I think needs more of my attention. And it's good to just have, we've tried with how far we've brought the company in these short years, yeah.
All right, just before we let you go, we would like to get updates on that $5,000 entrepreneurs sponsorship program that you started some time ago. What's the update on that?
It's been impressive. The first month we had over 2,000 applicants, and we're able to. I can't remember. I think the first one was agriculture, and so we're able to give 2 people grants. First month, second month, third month. We're in the 5th month now, and so we have. This month we have manufacturing and healthcare. It's been going very well, but what's even exciting is not just that we're giving them money, is that we're able to also mentor them. I'm having one-on-one sessions with them, showing them how they could really take the business to the next level. Because for me, I'm worried about the rate of unemployment. For us who are in the real estate sector, if the country is not secured, your real estate is zero. Right, because you can't get real value, you can't get enough investors, and for the kind of work we're trying to do in the next Vision 2035 is to have 200 estates in Africa, 25,000 green and smart home. To do that, we really need a safe and secure Africa, and the way to do that is to create more businesses, generate more employment, and you see crime will go down, obviously.
Yeah, sounds good, Dr. Akintaya, because the issue of unemployment is actually a source of worry to any reasonable Nigerian. You can do no business if there's no security. And if you have a huge number of the youth unemployed, then your security cannot be assured. Well, anyway, once again, we'd like to say congratulations on your 15th anniversary as GTEX Holding, and thank you for that party invitation. We hope to be there. Dr. Stephen Akintaya, chairman and founder.
I hope you will come this time. Many times you promised to come.
I will come. So. This time, we'll work on it, Dr. Akintaya. Thank you so much, and congratulations once again. Wish you all the best in your ventures in the future. All right, well, that's celebration calling. I hope I can make it. But anyway, now let's do more business now. There's quick commerce. That's relatively new in Nigeria. And they say sometimes it's used interchangeably with on-demand delivery. They say this generation is getting more and more in a hurry, and this is supposed to satisfy that. But let's get someone in here who knows firsthand how to do this business to tell us how it's going in Nigeria. We have joining us here in the studio, Oscar here. He's the Chief Executive Officer and co-founder of Global. Hi, Oscar. Good morning.
Hi, Amy. Good morning.
So this is relatively new in Nigeria, I believe.
Yes.
Q-commerce, quick commerce.
Quick commerce.
Yeah, so you're satisfying the Gen Zs who are so much in a hurry. They just want everything. This is mainly for groceries. Is it just for groceries?
So we have two big categories. One is restaurants. So
let's know what quick commerce is generally.
Yeah. So we launched Glovo here in Nigeria a little bit more than 2 years ago, and we basically deliver anything in your city in minutes. So
quick commerce is delivering food items to individuals on demand.
We're basically unlocking any product that is sitting somewhere in the city. We can deliver it in minutes, in more or less 30 minutes. And there's a lot of food delivery, so a lot of people that order from restaurants. There's a lot of groceries, but then any other category, like pharmacy, drinks, retail, etc.
But a typical Nigerian woman would want to go to the market, buy her vegetables, buy her carrots, and get it fresh.
Get it fresh.
Especially because it's edible, you want to be very sensitive about all of that. So how do you see this quick commerce progressing in Nigeria, seeing that you have more or less traditionally minded people, at least when it comes to edibles, food that you're going to put directly into your system?
Yeah, I think, look, mobile penetration is very large in this country as any other country in the world, and it's inevitable that people will start buying more through their phones. I think our grocery service is great. We also have fresh. And yes, it's a transition that will happen, I think, very fast. We're seeing how, especially new generations, are adopting these new ways of buying. And our mission is to have everything you can find offline, including markets or your favorite supermarket, also in your phone. And you don't have to take your car, traffic, spend the time.
Yeah, but you do have those issues with the road infrastructure. You do have those issues with internet penetration, standing as hurdles to the spread of quick commerce in the country.
Yes, Glovo operates in 25 countries. It's true that in Nigeria we have found some, let's say, structural challenges. But I think after 2 years, we know how to manage it pretty well. It's obvious, like traffic is very heavy. Sometimes our couriers or our shops are lacking internet, and we are trying to help them with different plans. I think after 2 years, the service is great. Most of our orders happen in less than 40 minutes. So we know how to do it. We're now operating in 3 cities, and we're ready to keep scaling.
Okay, but we had the courier service. Yeah. We have a courier service in Nigeria, generally on the motorbikes. But they have their own challenge, and then they have that policy, especially here in Lagos, you understand, that disrupted that. So there are complaints from businesses about policy somersaults in the country. Aren't you afraid of that?
Look, we have a team. We know we are changing the way cities work, and this is why we have a team that is called Government Relations, and we try to have a relationship. Even before launching, we try to explain to administration what our plans are.
You talk to the government?
Yes.
Because they are the ones with the policy.
Yeah, and we disagreed with that policy, but we adapted.
All right, we have to thank you so much, Oscar Pierre, the Chief Executive Officer and co-founder of Glovo. And we wish you the best in the face of other challenges.
Thank you. Good morning.
Yeah, good morning. All right, so let's take a breather now. When we come back, we'll head to the markets. Welcome back. Still watching Business Morning here on Channels Television. Headed to the markets now, not the quick markets, the money markets. Will walks in with a red. Anyway, I reported the red last night, so I won't put it on Will today. I wanted to say it's because of your dress, but I mean...
It already took place.
Yeah, it already took place, so it's not on you.
Yeah, post
but this is huge, going from that marginal 0.05. I knew we were going to get into red, but I didn't know it to be this deep.
Well, how did you know we're going to get into
No, I mean, it's the market cycle.
Well, the 0.05. The market sentiments were still positive despite the... So we're expecting expecting it to still go up. Well,
Will, you know, these days you look beyond the numbers.
True,
and those sentiments at the top, and then you just see what's coming up.
True.
Because a 0.05 gain was just
too marginal for
for
investors are probably just trying to take profit on
this is a whole lot of profit.
So we're going to look at the markets ended 0.75% down yesterday, 52,209 points. It's going below now. We're going to be hitting 51 maybe anytime soon. 28.428 trillion. That's the market cap. If we look at the activity chart, we see it in. Let's take a look at the activity chart now. We're now month to date is now in the red, back to the red zone. Year to date is still marginally in positive territory. Now volume is at 554.31 million units. Value at 5.95 billion naira, and all transacted in 5,168 deals. Let's look at the sectors and see how they performed yesterday. Banking sector was in the red deeply, 1.22% down. Consumer goods was up, thankfully, 1.30% up. Industrial goods down, as well as insurance. Oil and gas at Dover picked up that sector, 0.93%. A lot of buy interest in that stock. If we look at the top trades yesterday, we see Access Core, 139.28 million units of its shares were traded yesterday. Investors' interest in Access Core is still, really strong. We see FBN Holdings, 100.75 million units, and FCMB follows suit. Now, we're going to be talking to Onose Asotie Enaulo, is investment analyst with Main Street Capital Limited, to share insights as to what's happening in the market. Good morning, Onose. It's good to have you on the program.
Morning, Will. Thanks for having me.
So the equities market has halted 4 positive trading sessions we've seen starting from last week. What's happening? Is this new? What's new for the market? Can you tell us?
Right now, we've seen for the past 4 days the positive days we've seen in the market. We saw that the market was pushed, largely by banking and consumer goods stocks. Now, for the banking sector, we've seen that for the past maybe 2, 3, 4 years, for companies like Zenith, because in this market, I've seen it for Zenith, I've seen it for FCMB and even GT. Once their dividend qualification dates, for the full year dividend, once it passes, there is a gap down. However, the stocks are still considered fundamentally strong. So what we see is that a lot of investors just wait for that gap down, and then when the gap down happens, they start buying it. If you look at Zenith's price pattern, FCMB's price pattern, GTCO's price pattern, and even if you keep an eye on Access Bank's price pattern, you see something similar, where there's a gap down, and then there's now a push to the upside, a rally. And then we see, rallies in some consumer goods stocks like PZ, even a little bit of flour mills, and so we're just seeing investors take positions, in stocks that they feel are doing well, and also stocks that either their Q1 earnings releases are positive, or they are expected to have positive releases.
Okay, so there's news in the market. I wanted to talk about it. The Gergu CEO, that's Femi Otedola, has news that he has sold off 2.8 million units of his shares in the company, in the power company. We do know that he holds 95.6% in that power company. What can you tell us about this?
Yes. So BC Otedola, currently, I guess, divesting his investments in Gergu. Now, we don't know exactly why, at this point, seeing as the news came out, sometime yesterday, and the deal went through about, I think, on the 9th, so that's 2 days ago. Now, we know that Otedola was going after Transcorp, and that didn't exactly work out. So it could be that this is just a repercussion of Transcorp not working out, and so maybe he got into Gergu, as kind of a way station for Transcorp. It could be, I'm seeing as even was it this morning, the news came out that Osinbajo commissioned one of Transcorp's a new Transcorp power plant. So it looks like the end goal was Transcorp. And since that didn't happen, it might just be him trying to just get out of the other positions that he got in, because that may not have been, Gergu may not have been, his end goal. But then again, there's not a lot of information in the market. All we know is that he sold, and I think his brothers are increasing their shares as he's reducing his.
You know, everyone's just always looking at CEO, billionaire Femi Otedola and say, what's the next move? Where do we jump in? You know, follow the train and probably get some profits. So what do you predict for the market? Bullish or bearish? Just one word. What's your take?
Bearish.
Bearish.
For today.
Anase, we'll hold it to that. I'll look forward to that close. Thank you so much, Anase Asote, now law investment analyst, Main Street Capital, for sharing your insights on the program.
Thank you.
So we just look at the fixed income market. If you look at it, it's a bit very bullish. Okay, first of all, look at the NASD market. That's the unlisted equities market. It was down yesterday, similar with the equities NGX, 726.35 points, still at the 1 trillion naira mark. Quickly, volume was down relatively low. Turnover was not impressive except for the value due to sell-offs. Now we look at the fixed income market. Bullish sentiment still there. Yields are now trending lower against the bearish sentiments we saw in the previous trading session. Same with the Treasury bills market. If you see that, people are, you know, buying more buys and yields are going down because of excess liquidity to play with in the market. So, Ini, that's what we have for the markets. We're seeing so much happening, and we're hoping that he's saying it's going to be bearish for the equities. I'm hoping not. I'm hoping not.
Well, it's the beginning of the bear cycle. Maybe.
Maybe.
Yeah, but that's a lot, 0.75.
Yes, it's a lot. I hope people just, you know, cover that space and make it green.
I hope so too. All right, Will, thank you so much. Yeah. So now let's head to London now and find out what's happening with Juliana. The first thing we do know is that it's not just the US that is trying to meet up with that 2% inflation. The UK also has its, even though it's double digit now, they're trying to scale it down to a single digit. So I guess we expect more hikes from the UK. But Juliana is here to fill us in. Hi, Juliana. Good morning. And, well, just do your thing.
I will do my thing with a little bit of magic from you in Lagos. But you're absolutely right. Today is MPC Day. The Monetary Policy Committee of the Bank of England will be meeting at Threadneedle Street, which is in the city, to decide on interest rates. I think it's pretty much well known that the markets and economists have all priced in a 0.25% hike in interest rates, being the 13th successive rise of interest rates in the country, bringing it to 4.5%. That's massive, because if you just cast your mind back 18 months ago to December 2021, interest rates in this country were at a 0.1% rate, and a historic low. So this is having a significant impact. It's having a significant impact on the millions of households in the UK that have variable mortgages, which basically mean the month they pay at the end of the month depends on where interest rates are. So for a typical household on a variable mortgage rate, they have seen their prices shoot up to £482. This is on top, of course, of all the other bills which are rising with the cost of living crisis, which is at a 41-year high. And that is the reason why Andrew Bailey, the Bank of England governor, and the rest of his deputy governors are trying their best to bring down double-digit inflation, which, as you said quite rightly, Inni, is entrenched in this country. It's pretty stubborn at the moment. But there is a delicate balancing act to be had, because, of course, on the one hand, we do need inflation to be brought down. But then whilst they're hiking up these interest rates, it's causing millions of people further misery, because most people in this country have some form of credit. And if you are borrowing at the moment, just check your monthly bills, because you will start seeing this staggering rise.
Yeah, well, it's a huge job for them to get a balance between, you know, just dealing with inflation and not squeezing out economic activities. But you have the story of TransPennine. It's now being taken over by the government because of complaints before now. I wonder what difference that will make in that space, in the rail space.
well, according to critics in the opposition parties, nothing. But it's a big story here. TransPennine Express, as you quite rightly said, has been nationalised today. Well, not today, but it will be from the end of the month. This was an announcement by Mark Harper, who is the Transport Secretary. What happens is companies have to bid for contracts. TransPennine Express, which serves commuters living in the north of England and in Scotland, is run, I believe, by First Direct. No surprises that their shares have dipped 3% this morning, because Mark Harper has announced that from the 28th of May, when their current contract expires, they will no longer be able to run TransPennine Express. It's gone under this scheme called Operation of Last Resort, which basically means that the government have to bail you out. They say one of the reasons why is because their service is never on time, which any commuter in the UK knows it's pretty difficult to get a train running on time at the moment. The train service in the UK, train services have been really battered by the pandemic. We know that people's work conditions have changed. Most people are still working from home at the moment, or are not coming to the office in the 9-to-5 style they used to. And that's one of the ways that train operators have been able to run successfully, because of how much money tickets are providing them. Also, another issue that's affected the life of TransPennine under the guidance of First Direct is the fact that all of these strikes have caused massive issues. So ASLEF, which is similar to RMT, a union that looks after train drivers, they have been stopping their train drivers from working overtime. An issue with conditions, we talked about work pay and conditions. Conditions for rail workers have been that they've been doing overtime and they've not been getting paid. They've just been forced to stay in the office, not happy about that. They've not been doing that. That's affected the line. So yes, it's going to be taken over by the government. I think those living in the north of England and Scotland will not be happy because it's likely to be more heartache before it gets better, sadly.
Yeah, sadly, Juliana. Thank you so much for joining us, and enjoy the rest of your day.
Thank you.
All right, let's move to the crypto market. Very sensitive to United States data, inflation, CPI, everything. So I don't expect that market to look good this morning, Ladi.
You are correct. A lot of volatility yesterday when we got that positive CPI data, which was supposed to lift the market up, but Bitcoin got sold off again. Yeah,
I guess the difference was just so slim. I mean, from 5% to 4.9. Yeah, you may hardly feel it. Exactly. And as Dumebi told us earlier, core inflation is still on the rise.
Yeah, still
and
quite
that
high.
is a major food and energy prices.
Exactly, but we'll take that little good news there, month to month, year on year. At the end of the day, it's for what's the U.S. Fed is going to do next at their next meeting.
Oh, we know they're going to hike.
Are they going to hike rates?
We know they're going to hike.
Pivot on
and we have MPC this month also.
Yeah,
and
right
we know
here in Nigeria.
They're going to hike. Okay.
Okay, so that's your forecast. We're looking out for that for sure. So we see the market sentiment, crypto market, 52 points, neutral, moved away from greed. We've been in greed for the past couple of weeks now, but now we're starting to see neutral. We might see fear, moving forward. Let's look at the top cryptocurrencies. We track now. We see Bitcoin at $27,512, down 0.4%. A lot of volatility yesterday with that US CPI data for April. We got that. We're expecting that that would lift the market, but it got sold off. The bears took control again. Ethereum, $1,830, still holding that 1,800 level. The native token of the Binance Exchange, BNB, $312, down 0.16%. A lot of pressure on the BNB token, a lot of compliance issue with the exchange. We've seen that hammered on the price, and the bears taking over that price action with BNB. And we see Cardano, 36 cents. XRP, 42 cents this morning. So a lot of volatility still this market right now. Let's bring in Gilbert Jopata now, financial market analyst. Hello, Gilbert. Great to have you.
Yeah, good morning, Mr. Ladi.
Morning. So we got the CPI data yesterday. It was quite, positive for investors. Still looking for forward guidance on interest rate hikes going forward for the U.S. Fed. But it's positive, but we're still seeing, Bitcoin get sold off. Why?
Okay, the market was ranging for a while, and we're really waiting for the numbers yesterday so that the market could really have a direction. And I really expect the market to do more than this, but I think the market right now is very, very undecisive. While it's more like investors are looking at the market to see its next direction, the market is actually controlled by these investors. So the market itself is also looking at us and waiting for us to decide what we want to do with it. But right now we are still expecting this range. Investor sentiment or a very big market mover, an institutional investor will have to decide a path here for us. But there is really something about the CPI numbers. You know, one thing I love the CPI number is like checking your savings account to find out what is left over after the Fed is done with it. At the 4.9%, you know, it's like losing $49 on every $1,000. Why this is actually positive for the market? Because we actually anticipate maybe the next rate hike should have to be lower than this. I don't really think the Feds really did a great job on handling inflation. It's because after having an aggressive rate hike in over 50 years, I really think if inflation goes lower, like we expect it to go lower, this actually means that more money will come into the market, like the money printers will be turned on. So why this may be good for the market, because fresh money will push into the market, even bankers will push into the market. This will not actually be great for the economy itself, but for the market, investor sentiment right now will have to give us the next direction.
Right, we were looking out for that, but we still got that rumor yesterday. The U.S. government sold about 9,800 Bitcoin related to the Silk Road issue, but it's still a rumor. But is that why we're seeing pressure on the market somehow?
Well, I think sentiment right now is what is really making the market look a little bit undecisive. So even though we are testing some lower part of this range, the market really looks really neutral. If you really look from a more mid-term or macro perspective, the market is really neutral. We just need to really have a major decision for us to know where we are headed from here.
Exactly. Direction. Thank you so much, Gilbert Rupata, financial market analyst.
Thanks for having me.
All right, let's flip over to the top gainers now. Let's see who's topping that counter. Kava, again, up 4.69%. Was on the top gainers list yesterday, trading 89 cents. Still on the rise. Uniswap also up 3.72%. Market not looking bad. Single digit gains is what we're seeing this morning, Inni. So market still looking for direction, but it's neutral.
Don't worry, Ladi, the MPC will provide direction for your markets.
Wow, that's incredible.
All right, Ladi, thank you. See you at 1:30 for Business and Corporate. And that's where we draw the curtain on the program today. Thank you so much for being a part of it. We do have a final one tomorrow. What would that have? It's a package of 55 minutes of current and relevant business conversation, and it will be coming to you at 10 a.m. here. So please do join me then. Let's conclude this week. But I'll see you at 10 p.m. for the Stock Market Report. I'm Inni John Mekwa. Enjoy your day.